Hi, I'm Sharon Winsmith, a tax attorney, active investor, and your go-to resource for proven investment and tax planning strategies. In this video, I'm going to explain to you why I think most financial advisors are a scam. I know this video is going to tick a lot of people off. I've been very nervous about recording it because I know I'm going to get a lot of backlash about it, but I really do believe this to my core. I think there's a lot about the financial advisory industry that is holding a lot of people back from building more wealth and from achieving financial freedom. And I think there's a lot of issues with the way the space works. So I have a lot of friends that are financial advisors. I don't think they're bad people. And I really think the issues are more with the industry themselves rather than the people who operate as financial advisors. So I don't mean this to be offensive. And also, if you are someone who doesn't know anything about investing and isn't willing to spend the time and effort that's needed to learn these concepts, then you certainly need someone to help you. You can't just go at it alone. You have to understand the risk you're undertaking and be able to assess what investments are good for you yourself. So the other thing I want to mention is I'm not talking about people who work with things like family offices for people who have very, very large estates. I'm talking about when you have a financial advisor, if it's Bob at Merrill Lynch who manages your money and maybe you have a call with him once or twice a year to understand what's going on with your account, but you're handing off the reins as far as to someone else who's going to decide these are the investments that you're going to make and, keeps you updated on the status of your portfolio. So the first thing I want to mention is that I think a lot of people, use financial advisors for a lot of different things. There's a lot of different types of financial advisors, and I don't mean this video to apply to all of them. I do think there are some good financial advisors that can add a lot of value to you, and I'll talk to you about that at the end of this video. But if you're someone who's looking for financial planning, which is really more around how much cash do I need to be saving? How much do I need to save for retirement? How do I plan to pay for my kids' education? I think that's very different than someone who's managing your investments. If you do need help with that, I personally think there's enough resources online and educational materials that you can do that kind of stuff yourself. But if you just need to work with someone and feel better about working with someone, I highly recommend that you pay a flat fee for that and not do the traditional model where you're paying someone a percentage every year of your assets to manage those investments. You could just pay someone a one-time fee to sit down with you, go over your estate, everything you own, what your goals and objectives are, and try to decide, a good approach for you. They can also help you with deciding asset allocation at that point. You don't have to pay someone every year to manage your money in order to help you get good financial planning. So that's one thing I did want to mention at the start. So, before I dive into my reasons for why I think financial advisors are usually bad, I do want to explain that I myself have used financial advisors in the past. When I first started working at my very first job out of college, I had a financial advisor because I was lucky enough to be able to save even, when I first started working and graduated. So I used this guy at Wells Fargo. It was a complete disaster. I honestly thought a lot of what he was doing should have been illegal. He was lying to me about things and telling me, fees weren't charged on the cash I had in that account when they were being charged. And then Wells Fargo wouldn't do anything to repay me for those fees. So that kind of ticked me off at that point. Then I shifted to a more sophisticated, financial advisor, not the kind that every time you go in to do something at your bank, they're like, hey, do you want to meet with one of our wealth managers? Those are, I think, the worst types of financial advisors. But I actually went to work with someone that was much more sophisticated. This was actually someone that my dad and my parents used for several years. But that also wasn't very good. And I, worked with him for a number of years, and I finally decided I'm going to take, control over my investments and understand this better, because whenever I talked to the guy, I had no clue what he was saying or what he was talking about. And one time when I had my annual meeting with him, I actually looked and I said, tell me how this account has performed against the S&P 500 for the past, whatever years that he had been managing my investments. I had watched a video or, listened to a podcast or something that said that's a good way to track your financial advisor's performance. So I asked him to show me, and I realized that I was underperforming the S&P 500 by several percentage points every year on average. So I said, why are we not at least beating the market here? And he said, we're not trying to beat the market. We are, we have other objectives and goals. And he told me some cockamamie story about, this dividend investment philosophy. And, it didn't make any sense to me. And I didn't understand why I was paying someone to not even do better than I could do if I just invest in an index fund. So that was a big realization moment for me. And that was the day that I fired my financial advisor and I took control over my own finances and investments. I spend more time probably than anything learning about this stuff, and my returns and my ability to make more money on my investments has completely amplified. It's not even close. It's more than double what it was when I was working with financial advisor. So I highly encourage you to consider if that's the right path for you. I know a lot of us think we're too busy with our business. We need to focus on our jobs or running our businesses. We'll just leave that to the professionals. Well, I think you could be doing yourself a big disservice and have a big impact on the amount of wealth that you're ever able to build, and certainly an impact on the time it takes you to achieve financial freedom. So I know that was a long intro, but I just wanted you to understand where I'm coming from. I do have experience working with financial advisors. I'm not just saying this based on what I've heard. I have actual on the ground experience with working with them. And it was a big disaster for me, for my own investments. And it's not dissimilar from everybody else I know. So let's go ahead and dive right into what I think the real issues are here. So I think the number one issue I have with financial advisors is that they don't manage your investments. They manage stocks and bonds. So the vast majority of financial advisors are only going to tell you to invest in stocks and bonds. There are some financial advisors, and these are the only ones that I would ever consider using, are the ones that give you access to alternative investments, such as private equity funds, venture capital funds, real estate funds, and syndications. Those are, more holistic financial advisors that really manage investments as a whole. But if you're someone who's really trying to build wealth and achieve financial freedom, I personally think a strategy of just investing in stocks or just investing in stocks and bonds doesn't make a lot of sense. You're not diversified in that situation. I think it's very risky, and I think your ability to get higher returns is very restricted by that. So I don't think someone who only tells you to invest or only understands or manages, investments in stocks and bonds is someone that you really want to rely on managing your wealth. I used to, when I did consulting, work with a lot of financial advisors that were making a lot of money, close to 7 figures a year, would come to me and ask me about, and I would coach them on how they should be investing their money. So think about that and let that sink in. These are people that you're paying to manage your money or coming to people like me to tell them how to manage their money. So that should be a big red flag to you. So investing is not just stocks and bonds. I personally, I don't invest in bonds. They don't make sense for me and for what my goals and objectives are. I would never tell you what to invest in. But if you think the only investments available to you are stocks and bonds, then I would highly encourage you to do more research and really understand how wealthy people invest their money. Because I know a lot of very sophisticated investors who don't even invest a penny in stocks. They think that the returns aren't justified. They don't like the volatility, whatever it is. So stocks and bonds are not the only investments, and anyone who's managing your net worth and your savings and your wealth and telling you that you should invest 100% in stocks and bonds, I would be very concerned about that strategy. Also, I personally don't think your interests are aligned with financial advisors. The base on which their fees are calculated is how much money you have in that brokerage account. So going back to number one about investing outside of just stocks and bonds, every dollar you take out of that account and put in a real estate fund or a private equity fund, or even in your own business or a new business that you want to buy, that's one less dollar that financial advisor's fees are computed on. So you have to be very careful there and think about that, and think about it in light of that they are incentivized to recommend you only invest in stocks and bonds, because they don't get any fees if you start pulling money out of those accounts and investing in other investments. They also get paid regardless of performance. Their fees are based on that entire asset. So if you have $1 million in that account and you're paying your financial advisor 1% every year, that $1 million could just stay stagnant and not grow at all, and they're still getting their fees. So they're not paid based on how well they perform for you. They're paid based on how much money you have under their management. Some firms also have proprietary products like mutual funds. I absolutely hate mutual funds. I think they're I don't even understand why they still exist. But, this is not investment advice, this is my own personal opinion, but they're highly motivated to encourage you to invest in those products. So they might not be telling you the best investment that you should make. They might be telling you the investments that they're being told by their boss or by, their institution they work for, that they should push on to their clients. Also, I think there's a risk tolerance mismatch. So my personal experience, and for what I've heard from others, is that financial advisors are most scared of calling you and telling you they've lost your money. So they're more, I think in a lot of cases, not willing to take on risk or calculated risk. And I think that can be very bad for you and detrimental in the long run. If you take any Finance 101 class, the first thing they're going to tell you is that the biggest risk you can take with your investments is not taking any risk. So you do want to take calculated risk that makes sense for you. But keep in mind that your financial advisor might not want to do that, because the last thing they want is to have to call you and say, you're down, a couple percentage points this week, whereas we were up. So you want to understand risk. What's the right risk for you? The right risk for me might be a lot different than you. And so a financial advisor isn't going to necessarily understand that and invest in a way that they understand what your risk tolerance and objectives are. So I also think a lot of financial advisors do this one size fits all approach. They might work for some large institution or bank, and then that bank or the person who runs that comes up with some philosophy on investing, like this dividend, approach that my financial advisor used to talk about. And then they're going to push that down onto their advisors that are working with clients. So I think that's crazy. I think this one size fits all approach is just completely outdated. My financial advisor was applying the same approach to me when I was in my 20s and just starting out that he was to my dad, who was almost at retirement age in his 60s. So that's crazy. That is absolutely crazy that someone that is that much older than me and much further, and actually at the end of their career, that they would invest the same way I would. I think that's absolutely crazy. And that was a big red flag to me as well. It's kind of like, hey, what are we doing here? But a lot of financial advisors follow these one size fits all approaches, like the 60-40, method where you invest 60% in stocks, 40% bonds. I think that's crazy. I think that's completely outdated. They used to teach that, the way you decide how much you invest in stocks versus bonds is you subtract your age from 100. And, that's how you decide what should be in stocks and the remaining should be in bonds. That's crazy, right? I personally think that's extremely outdated. It doesn't make any sense. Someone like me who sits in New York City at my age with my job and my level of savings is going to have a much different risk profile, investment profile, and objectives than someone who, lives in Texas and is 60 years old and, all their kids are through college already. It's ludicrous that we would all do the same strategy regardless of age, or even, at the same age that we would all do the same strategy. So I think that's completely outdated. It makes absolutely no sense to me. Also, financial advisors absolutely almost never outperform the market. Conservative statistics show that 90% of, managers actually don't outperform the market, and certainly not on a long-term basis. So I'm not going to spend a lot of time on this. I think this is pretty well known that, financial advisors do stock picking. I don't think you're going to pay someone to then just go invest in a S&P 500 index fund. That wouldn't make a lot of sense. So most financial advisors either tell you to invest in mutual funds, which are a disaster in my opinion, or they do stock picking. So you might have a portfolio that's got Coca-Cola, Apple, Walmart, that kind of where you got if you pull up your brokerage account, it's got all these different big, large cap companies. That's stock picking. So they almost never outperform the market. Particularly when you add in the taxes that you pay when they do trades on your account and then the fees that you have to pay them, they very rarely outperform the market. I'm not going to spend a lot of time on this. I think this is pretty well known at this point. There's been a lot written on this. Warren Buffett has done a study around this. So I'm not going to spend any more time on that, but you're paying someone to basically underperform the market in most cases. So the other thing is that their fees eat into your earnings. You need to understand that even if you're paying 1%, you should, in my opinion, should never be paying more than 1%. I know some charge 2%, but I think that's crazy. So whatever fees you're paying, you might think, oh, it's only 1%. That is 1% of every dollar you have in that account every single year, regardless of how that account performs. That can significantly eat into your earnings and your lifetime earning potential. If you're someone who's a really good saver and, invest your money and you're very sophisticated and disciplined, you're going to be paying millions and millions of dollars and losing millions and millions of dollars in earning potential because of those fees and because of that. Every fee you pay to your financial advisor, every dollar that comes out, that's one less dollar that you have the benefit of compounding that investment on. So those, not only are you losing the money you pay to the financial advisor every year, you're losing the ability to compound the investment returns on that money. So the cost is huge and it can really add up and it can be a lot more than you ever think it is. So personally, the fees, are just really bad as far as when you model it out and look at your lifetime earning potential. I also think there's a lot of conflicts of interest. So I mentioned before that your advisor may get, commissions for recommending products. There's different types of financial advisors. There's, most of them have to have licenses in order to recommend investing. What investments you make, you have to, have a license to do that. There's broker dealers who might get a commission when you make a trade or buy a certain product. So there's some financial advisors that are better than others. You certainly wouldn't want to work with someone who can make a commission for telling you to invest in a mutual fund. I've actually seen a situation before where someone had a financial advisor that they were paying, I think it was 1% a year. That financial advisor was then putting 100% of their money into one mutual fund where they were getting the financial advisor fees plus the commission on the mutual fund. So this person had 100% of their savings in one mutual fund. Again, I hate mutual funds. I'm not telling you not to invest in them, but I personally hate them. I think they're a disaster. They're horrible with fees and trades and how they work. They also never perform the market, as I mentioned before, in almost all cases. But I personally don't understand how that's not illegal. You can't invest in quality real estate funds until you're a millionaire, basically, under the accredited investor rules, but you can pay some guy or woman at a bank to manage your money and have them put 100% into a mutual fund that they get a commission for. I don't know how that's not illegal, but that's completely just ludicrous to me and crazy that is even allowed to exist. But I would watch out for that. I'd never invest in mutual funds. I think they're very bad for a number of reasons. I think a lot of people understand that and don't use financial advisors that do invest in mutual funds, but just watch out for that. There can be a lot of conflicts of interest there. One thing I really don't like about financial advisors is they need to justify their fees. You're not, like I said, you're not going to, unless you really, once you really study and know what you're doing, you're not going to pay somebody to manage your money and then just have them go invest in an S&P 500 index fund. So they're going to invest in different stocks, right? They're going to do stock picking. They're going to make you feel like you need to pay them to know which stocks you should and shouldn't buy. And they're going to do things like rebalancing. That's my favorite. They'll call you, hey, Sharon, we need to rebalance and do some sales and get you back in line with our, intended approach. So I think that's crazy. You're going to trigger taxes when you do that. It's bad just from, an overall investment philosophy. It doesn't, I'm a big fan of the buy, borrow, die tax planning strategy. I like to buy assets for the long term. And so that completely cuts against that strategy. They also have to sell stocks to pay their fees every year. So either they're holding cash in that account, which I never hold cash in a brokerage account. You're probably paying fees on that cash too for them to manage, or you're just wasting investment potential by holding cash. But they're either going to have to hold cash to pay their fees every year, or they're going to have to make sales. And then you're going to pay tax on the sales that they make, where they're selling your shares to pay their own fees. So I don't like that. I don't like that they, feel like they have to do these things that aren't good for you, to rebalance or, pick new stocks and sell stocks and that kind of thing. So I'm not a fan of stock picking. I'm not a fan of, paying someone to do something where they feel like they have to do things to justify the fees you're paying them. Also, the advice is not holistic. So financial advisors don't understand tax. I've heard some crazy things come from financial advisors for when I used to work with clients directly. They don't understand taxes and tax planning. They don't understand the legal issues and asset protection issues that you face as someone that might be high net worth or looking to build net worth over time. And they really don't understand alternative investments, most of them. There is a caveat that there are some financial advisors who do manage alternative investments, so I will carve them out. I think, if they're good and know what they're doing, that can be a valuable, person to have working with you. But they don't understand alternative investments for the most part. They're not going to understand things like cryptocurrency. So, that's not holistic advice. Again, investing is not just stocks and bonds. There are much better, in my opinion, investments out there for me. So that means that there's other investments. Maybe you don't want to make investments in real estate funds or, private equity funds, but you certainly should know about them and have someone or yourself understand what investments are available to you. So it's not holistic advice. I don't even think it's close to that. I don't think they understand most of the issues or really important issues that you face. And I think those are important to understand before you're going to manage your money and decide how to invest. So I know this one sounds kind of mean, but they don't make a lot of money. When I was given some of the best advice I was ever given, I wish I had been given it earlier in life, but someone that I really value their opinion once gave me the advice when I was starting my business to never take advice or the opinion of someone who is not wildly successful in that area. So, for example, you wouldn't work with a physical trainer who's overweight. You would want someone who really is in shape and really is wildly successful in working out. So just with that, why are you letting someone manage your money that isn't wildly wealthy? I personally, I would maybe listen to someone. If Tony Robbins or Warren Buffett was willing to manage my money, I'm happy to pay them. But someone who's got $50 million net worth or $100 million net worth is not a financial advisor. They're not going to be managing your money. They're not going to be working with clients. So financial advisors themselves don't make a ton of money. You might be surprised. I think when I looked up the average salaries, they were a little bit over $100,000 in states like New York where they're paid more. So that was also kind of, very, very alarming to me. I would not trust someone to manage my money that didn't have a ton more money than me already. So, and those people aren't working with clients. So if they did, if they were really, really good at what they did, then they would be running a fund, right? Like if you're really successful at picking stocks, for example, you're not working with clients, or on behalf of Merrill Lynch or even on your own. You're not doing that. You're running a fund. And if they're really, really good at it, they're going to be hedge fund managers. So you're not working with the cream of the crop necessarily in that field. There are some financial advisors who do work with clients who are very good, of course, but I'm speaking about the industry as a whole. That's just the way it works, right? The best CPAs out there aren't the ones grinding, every April 15th, working 100 hours a week, all the weekends, doing tax returns, right? They're out there doing more thought leadership type work. So just think about that and think about how important that is. You want to be working with the best of the best. You want to be taking the advice of the best of the best. There's endless books out there. There's endless materials, podcasts, YouTube channels, just paid courses, anything where you can really get advice from people who are wildly successful in investing and building wealth. So I personally would rather take their advice than someone who's making $100,000 a year, or maybe even more than that, but isn't, financially free themselves. So I just want to point that out. I think that's very important. I know it's not necessarily the nicest thing to talk about, but I do think it's important, and we have to talk about these concepts if we're going to be serious about building wealth. So just getting to the last few, I'm just going to run through these really quickly. As I've mentioned before, they're paid regardless of performance. So you pay your fee based on assets under management. That amount could go down. They could lose a lot of your money. They're still getting paid, right? So I'm not saying they don't care. Obviously, the more money they make for you, the more their fee is because it goes up because the base is higher, but they're paid regardless of performance. I hate situations where you're paying someone a percentage of something when that's not based on the value they provide to you. So I just hate the way that they're paid. I think that needs to be completely redone. That's an industry issue clearly, and I think it's outdated, and I think that it should just not exist anymore. So the second to last one, unrealistic estimates of expected results. So I get a lot, when I used to work with clients, I used to always get, the brochures that their financial advisors would put together for them. You see some crazy returns on there. I don't know if they're just scared to tell you, they don't want to underperform. It's kind of the old philosophy of, under promise and over deliver. So you'll see things where financial advisors are telling you to expect 6% a year. I once had something my dad showed me from one of his advisors where his retirement plan was expected to grow at 4% per year. That is insane. I am sorry. Why are you paying someone to tell you that they're going to make you 6% per year? That's way less than you would make just, based on average historical returns of the S&P 500. So I have to really ask myself, why would I pay someone to make me less money before I even apply their fees to it than I would make putting an S&P 500 index fund? I really don't understand that. It makes absolutely no sense to me. If I'm going to work with you to manage my money, you better come up with some returns that are better than that. I invest in a lot of funds with a lot of different fund managers. If somebody came to me and said, I'm expecting 6% returns on this fund, I would say, get out of here. I wouldn't even open the email to look at that. That's crazy to me. I know we all have different risk tolerances and different, objectives here, but I'm not touching something. And I think that's crazy to me that you're paying someone to give you expected results of 6%. I would expect much higher than that. If I invested with the fund that didn't make 10% at least, I would be very unhappy, and that would be the absolute last time I invested with that sponsor. So this unrealistic, how can you model future savings that you're going to have and how much you need for retirement, how much you have in your 401k and the taxes you're going to pay on that money? If you're sitting here modeling something based on 6% or 4% returns, I think that's crazy. And there's no way to accurately plan on that with, not knowing. I hope to goodness that your financial advisor is well exceeding that 6%. Otherwise, to me, that's just crazy. So I think, this unrealistic estimates of expected results is big here because you can't plan if you don't know what you're going to make. So you want to have more predictability on how much you're going to invest. So if you are going to work with a financial advisor, just say, hey, what am I really going to make? What, based on historical performance of your approach, what are the returns? And hopefully they're much higher than 6% or 4%. The last thing I'm going to mention, I think this one's obvious, is that your entire net worth is relying on one person. If you're someone who has one financial advisor, they are managing everything that you have in your savings. And so I hope for your sake that they are good and that they are right, because if something's wrong, I think it's very rare that this happens, but there are Bernie Madoff situations where they run off with your money or do something unsavory. But regardless of that, you're investing 100% of your savings and your net worth and your future on one person. So I really, really hope that person's right, because if they aren't wildly successful, then you might not have the result that you could have had otherwise. So I think that's the last thing to keep in mind, is that, is that really a safe or, a good strategy to have, to just rely on this one person's expertise? The last thing I'll mention is that I do think there are some situations where people need to work with financial advisors. As I mentioned, if you don't know what you're doing and you're not willing to invest the time and effort, then yes, you might need someone to work with you. Also, if you have just a ton of money that you don't care about losing that potential, which is, that is the case. I think there's a lot of people who they don't find this stuff as interesting as I do. They don't want to have to study it. They're happy to pay someone 1% a year because they've already got so much money. Then my recommendation is to work with someone who handles alternative investments. So in a lot of cases, that person might be able to get you access to good funds that, you or I can't just go ourselves, because they don't want to invest with people like us. They're only investing with high dollar ticket items. So that person may be able to kind of aggregate a bunch of investors and get you access to the really big funds out there that normally you wouldn't have access to. They're able to advise you on actual investments, so the wide range of investments. You want to talk to someone about cryptocurrency, what that's about, if you should be, buying any of that, and how that might be a good addition or bad addition to your portfolio. But definitely real estate, funds, syndications, not just REITs. I don't like REITs. I don't ever invest in REITs for the most part, but you want to get access to other deals and see if those things like venture capital, if you've got a bunch of money, it might be worth looking at other different asset classes. So that's the last thing I'll mention. If you are going to work with a financial advisor, make sure you work with someone that actually handles all the types of investments you can make, and can potentially get you access to deals you wouldn't otherwise get. So I know this was a long video. I think this is very, very important to understand. I think this is a big mistake I see a lot of people make, is they just hand the reins over to financial advisors. But hopefully you found this, parts of this video helpful, and it might be food for thought to think about. I apologize to my friends that are financial advisors. I don't think they're all bad. I think there's just big issues with the industry that are outdated and that we need to rethink. But hopefully you found this video helpful. If you did, please like the video and subscribe to the channel.